The AI boom might be the biggest wealth creation moment of our lifetime or the next $1 trillion bubble ready to burst. Nvidia's valuation is off the charts. The S&P 500's PE ratio is flashing red and the institutional money is quietly rotating out of tech. The question is, are we nearing the top of the AI bubble? In the next 10 minutes, I will break down what's really happening behind the scenes, show you one live chart that reveals everything, and share how I would personally play Nvidia safely. So stick around, this could save you thousands. Quick note, I'm not a licensed financial advisor. Nothing in this video is financial advice, just research and opinion. Always do your own due diligence before making investment decisions. So let's define what is meant by a bubble. In the markets, a bubble happens when prices rise way beyond what fundamentals can justify, driven by hype, speculation, and emotions. Think dot-com 2000 or crypto 2021. It's not that the idea is fake, it's that valuations go parabolic faster than earnings can catch up. So here is the hard truth. Bubbles always eventually burst. The only uncertainty is when. You can't time it perfectly, but you can recognize the signs, valuation ratios, market euphoria, and the behavior of big money. So let me unpack the valuation warning signs, particularly focusing on the price to earnings ratios and the Buffett indicator based on some data. Nvidia currently trades at the price to earnings ratio above 55 compared to the S&P 500's average of 19. That means investors are paying 3 times the normal price of every dollar of earning, right? Then there's the Buffett indicator, which is the total market capitalization of all US stocks divided by the GDP, gross domestic product. It became popular after Warren Buffett indicated in an article that was published in Fortune in 2001. And he, in fact, stated that anything that is above 200%, investors will be playing with fire. So any value that is above over 100%, it means in that particular perspective, stocks are overvalued. Currently, as of November 9, the article that I saw on Yahoo Finance, it indicated that the Buffett indicator was at 223%. So that's a bubble territory. Again, the way that I look at it is that, are there some individual companies within the S&P 500, which is a broad basket of companies that come from different sectors and that are publicly listed in the US? Are there some companies that are overvalued? In my opinion, yes. Are there other companies that are undervalued? Yes. Then when you look at the broad S&P 500, it has been driven by the narrative around AI that is going to make things better and cheaper and better. Now, the key question is, all the companies such as Nvidia, you're talking of Palantir, even OpenAI, which is a private company, they should then justify those valuations. Now, when valuations detach far from the fundamentals, smart money starts rotating quietly out of growth and into safety. So how do you observe this? You can see fund flows, or you can see that the market in certain stocks, if you look at Palantir, for example, and Nvidia, it has been pulling back because these big fund managers, they have a lot of money that can really move the market. They're the market makers. They can drive the market up or down. So if you see the stock dropping significantly, what that means is that there has been more net sales. In other words, the sellers have been in control. So in my view, when I see that, that's a red flag. So let's talk about Nvidia. Why I think Nvidia is at the center of all this. Nvidia is at the heart of the artificial intelligence story because their GPUs power everything. Chat GPT, self-driving cars, cloud computing, you name it. With an 80% market share in the AI compute. They have built a very strong empire. But empires attract hype, especially if there is profitability. These hypes then, in my view, breeds risk. Nvidia's next earnings drop on November 19, and the entire market, including myself, I will be watching. Usually, when Nvidia reports earnings, it can either drive the market, in particular, up or down. It's a very big company that is very popular. A lot of investors, they have money that is in there. And some watch to see what could be inside to then make some intelligent guesses. So, what are analysts saying about the valuation? When I looked at stock analysis, the lowest was $100, and then the highest analyst was valuing it at 350. But that's not analysis. That's gambling, because I remember even Warren Buffett, as an example, once said valuations are only as good as assumptions. And in most cases, these valuations, while they are very important and good indicators, some use different models like cash flow discount models. But the thing is, sometimes the information that the assumptions that they are making may be outdated. That's why they always upgrade or downgrade stocks, because they now have some information that they would not have when they do those valuations in the past. So another interesting dynamic in my view is that the AI hype loop and open AI risk. Here is where things get circular. At the center of this bubble, in my view, is also OpenAI, a private company with massive influence. A chart by Morgan Stanley shows that how secular this AI economy is. Where I found it interesting was that if you look, for example, Microsoft invests in OpenAI, OpenAI buys Nvidia chips, Microsoft then uses those chips to sell AI services, and then investors buy Microsoft and Nvidia again. In other words, the money is flowing in loops, creating an artificial growth. So if something shakes OpenAI or one of those big companies, let's say Microsoft, such as, for example, regulation, lawsuits, leadership crisis, it could potentially trigger a chain reaction across the AI sector. Remember, purpose don't need earnings misses to pop, just confidence loss. Once the narrative shifts, then potentially the house of cards can crumble. So it's a feedback loop, same dollars cycling through the same layers in case of the open AI. Let's look at a quick technical analysis. So I'm just showing you this chart for Nvidia, and I'm recording this video on Tuesday, November 11. You can see that it closed at $193.16, but it's extremely difficult to predict what's going to happen with stock price because there are a lot of unknowns. But if I was to play a trade on Nvidia, one thing that I would do is, number one, I would avoid playing a trade, especially if they are a few days before earnings, because earnings can be wild in terms of the reaction. Investors can either overreact, but it can either go up or down. But if it goes down, there's a lot of high implied volatility. I like Nvidia because you can see that here it has been uptrending, right? The stock has been really going up, and it went up to as much as almost $213. But currently, using this chart technical analysis, what I would do is I would just do what is called a cash secured puts. In other words, I should have the cash, and then I would take a strike price with a low delta, let's say 0.18, which means there's an 18% chance of the stock dropping to that level. So the strike price that I would take is, let's say, 160. So from the current price, it means I would have taken a 13.52 discount from the current price. So let's say after earnings, because the Bollinger Band kind of like tells you what market makers are pricing at the price range. In this case, it can probably come this high, or so this is the range, this Bollinger Band. But right now it's on average. So it can still either go really up, even if, because it might still go up, or go down because price change every day. but it can still go up or even rip up, but there's usually maybe 5% chance because this range is within the 2 standard deviation, right? Where within the Bollinger Band from the 20 moving average. So this is how I would play this. So I would sell a cash secured put with a strike price of 170 and get paid $305. That is $3.05 because one option contract in this case is underlying 100 units. So what that means is my cost basis means that even if it falls to $170, I still have $3.05. So I will have $166.95. That would be my average. So that's how I would play it, because to just buy it at that range and the average is probably from the analyst is 217, right? So that's a bit riskier in my view. So I think that's how I would play this. Let's now talk about the issue of the bubble as I wrap up. So is this bubble starting to burst? Maybe not yet, but there is no question we are in a deep hype phase. Companies with no profits are doubling just for saying AI in their press releases. Nvidia, on the other hand, actually makes money and a lot of it. But even great companies can become overvalued when crowds go all in. They are also wildly profitable. Their free cash flows has been growing and it just hit 72 billion recently, and even they have a lot of cash, 57 billion on the 12-month trailing value. So debt, they have about, the last time that I checked on stock analysis, it was about 8.47 billion. So yes, Nvidia's fundamentals are strong, whichever way that you look at it. But is the value justified? I think yes, the value is justified, but the challenge is that other stocks that might be hyping this AI narrative without justified profit, without strong balance sheet, that's where I would watch. So for me, I would avoid those stocks that are in those categories that are not generating value. So now I want to hear from you. Do you think the AI bubble is real? Are you buying, holding, or repositioning your portfolio right now? Drop your thoughts in the comments. I read every single one of them. And if you are new here, hit that subscribe button, give this video a thumbs up, and turn on the notification bell. It really helps the Streetwise Economics community to grow. And remember, if you want deeper breakdowns, trade ideas, and one-on-one coaching, check out my new website, www.streetwiseeconomics.com. I've just launched new programs for traders and investors who want to learn smart, low-risk strategies for markets like this. Thanks for watching. Stay smart, stay patient, and always stay streetwise. I will see you in the next episode.